Massive alert for AI stock investors. One stock has been making insane moves in the market, skyrocketing over 100% in just 1 week. But here's the shocking part. While everyone is FOMOing into this hype, the real numbers tell a different story. Is this stock actually overvalued, and are investors walking into a trap? Or is this the golden opportunity that could lead to massive gains? Stay with me until the end, because what I'm about to uncover could change how you see this stock forever. Let's break it all down. Welcome back to IMAAM, where we analyze market movements, uncover hidden opportunities, and help you make smarter financial decisions. Today, we're diving deep into BigBear.ai, BBI. Is this just another meme stock, or does it have real potential?
Fortunately, we've exited the true experimental phase, and we're now going into the narrow use case.
We're going to analyze the company's fundamentals, technicals, and future outlook, including whether it's time to buy, sell, or stay away.
Where you're seeing applications of it in a production environment that are hyper-targeted, very specifically trained, the performance is controlled, and we've seen a lot of examples of that, more and more and more, but we're still building by ones.
And most importantly, we'll break down where smart investors should enter and exit for maximum profit. So make sure to watch until the end. Market performance breakdown. Last week was absolutely wild for BigBear.ai. The stock started at $4.70 on Monday, but by Friday, it closed at a whopping $10 per share. That's an insane 116% increase in just 5 days. So what's driving this surge? A mix of speculation, investor hype, and some major announcements. But before you get caught up in the excitement, let's take a deeper look into what's really happening. Fundamental analysis. Is BBI actually worth this much? On paper, BigBear.ai has positioned itself as a leader in AI-driven analytics, with a focus on government contracts. Recently, they secured a new US Department of Defense contract, fueling even more hype around the stock. But here's the critical part that most people are missing. DCF valuation models from 3 different sources place its fair value between 64 cents and $2.50 per share. That means at its current price of $10, the stock is massively overvalued since its growth stock. If you're buying at these levels, you're paying way above its intrinsic worth. And when reality kicks in, a major correction could be coming. While retail investors are piling in, institutional investors are making some strategic moves. Here's what we found. A major investment firm recently increased its stake by 28.6%, now holding over 2 million shares. Another firm boosted its position by 16%, adding 276,000 more shares. Yet another financial group raised their stake by a jaw-dropping 699%, acquiring 174,000 additional shares. So what does this mean? Institutions are getting involved, but they're also waiting for a strategic exit point, and you should too.
Financial performance. Let's analyze BBAI, BigBear.ai, Holdings Inc. financial statements from Yahoo Finance and calculate the requested ratios, along with their implications. Important note, Yahoo Finance data may have limitations and potential discrepancies. For a more in-depth analysis, always refer to the company's official SEC filings. Here's the breakdown. 1. ROI, return on investment. We'll use average total assets as a proxy for total investment for a clearer picture. ROI is negative 54.37%. Implication: a negative ROI of negative 54.37% indicates that the company is currently not generating profits from its investments. This is a significant red flag and suggests operational or financial challenges. 2. ROA, return on assets. ROA is negative 50.92%. Implication: a negative ROA of negative 50.92% shows that the company is losing money relative to its total assets. This implies inefficiency in asset utilization. 3. DOL, degree of operating leverage. Degree of operating leverage is equals 2.89. So the implication of the degree of operating leverage, 2.89, indicates that a 1% change in revenue will result in a 2.89% change in earning before interest. This signifies high operating leverage. This means that a small increase in sales could lead to a large increase in profits, but also a small decrease could lead to a large decrease in profits. In a company with large fixed costs, such as BBAI, this result is not unexpected. 4. DFL, degree of financial leverage, is 0.35%. Implication: a DFL of 0.355 indicates that a 1% change in earning before interest results in a 0.355% change in EPS. This indicates a relatively low financial leverage. This means that the company's financial structure has less of an effect on the EPS than the operating leverage. 5th one, EBITDA, year-on-year growth, is 47.1%. Implication of 47.1% decrease in EBITDA indicates a significant decline in operational profitability. This is a negative trend.
6. EV/EBITDA. EV/EBITDA equal 207.85, 93.93 equal minus 2.21. Implication. A negative EV/EBITDA is generally not meaningful and indicates financial distress. It is due to the negative EBITDA. 7. Free cash flows. Free cash flow are negative 86.84, subtracted by negative 1.49 equals negative $85.35 million. Implication. A negative free cash flow of $85.35 million implies that the company is burning cash and is not generating enough cash to cover its capital expenditures. This is a major concern. 8. Operating leverage. This is conceptually related to the DOL. It reflects the proportion of fixed costs to variable costs. A high proportion of fixed costs indicates high operating leverage. Implication. As seen from the DOL calculation, BBAI has a high operating leverage. This means that changes in sales volume will have a magnified effect on operating income. 9. Debt-to-equity ratio. Debt-to-equity ratio equals 19.34, 179.85 equals 10.75%. Implication. A debt-to-equity ratio of 10.75% indicates that the company has relatively low financial risk, as it is primarily financed by equity rather than debt. Summary of key concerns. Negative profitability, ROI, ROA, net income, EBITDA, significant cash burn, negative free cash flow, high operating leverage, negative EV/EBITDA. These factors suggest that BBAI is facing significant financial challenges.
The right entry and exit strategy. If you're looking to maximize profit while managing risk, here's the best buy and sell strategy. Technical analysis. What the charts say. Buy target. $1.40. This is the best possible entry point based on long-term valuation. Sell target $9. This level ensures you lock in gains before major volatility kicks in. Right now, at $10 per share, the stock is already trading way above its fair value. So if you're thinking of buying in now, you're taking on serious risk. Looking purely at the charts, we see a pattern that's played out before. In 2022, the stock saw a similar spike, only to crash hard afterward. At the beginning of 2023, another sharp rise followed by a major correction. Right now, the stock is following the same cycle, a strong surge that could be followed by a steep drop. If history repeats itself, we could see a massive pullback very soon. That's why buying now is extremely risky. Final verdict. Is BigBear.ai a smart investment? If you're already holding BBI, consider taking profits soon. The numbers show that the stock is overvalued, and history suggests that sharp corrections often follow these parabolic moves. But if you're looking to enter, wait for the price to drop closer to $1.40 before considering an investment. That way you get the best risk-to-reward ratio. Remember, stocks that skyrocket like this don't stay at the top forever. Be strategic, avoid FOMO, and make informed decisions. What do you think about BigBear.ai? Do you believe it has long-term potential, or is this just another overhyped play? Drop your thoughts in the comments! And if you want to stay ahead of the market with more expert insights, make sure to subscribe to I Am Official and turn on notifications.